Hey guys, Justin here. So today I want to talk about two high growth stocks that operate in what is known as the programmatic ad market. Now, the biggest and most well-known name in this space is a stock that I have been invested in for quite a while now, and that is the Trade Desk. But while the Trade Desk stock currently sports a market cap of around $36 billion, the two stocks I am about to talk about are much smaller. One of them currently has a $3.9 billion market cap, and the other is right around $1.6 billion. What this means is that these are both stocks that have 10x potential if they can grow as big as the Trade Desk one day. But before I get into the video, please consider subscribing if you have not done so already, and make sure to hit the like button to support the channel. Now, the first programmatic ad company I want to talk about is Magnite stock. Magnite has a market cap of $3.89 billion and is up over 700% since its lows back in April of 2020. Now, Magnite, just like the Trade Desk, is looking to take advantage of what is known as the connected TV space. As more and more smart TVs are sold each year, there is a much more diverse set of platforms that ads can be run on. And if you are an advertiser looking to place your ads somewhere, then this new digital landscape can be quite challenging. So Magnite's whole business model is to try and simplify this process by making it easier for advertisers to get their ads shown on the right platform, or in most cases, many different platforms. Now, according to Laura Martin, a five-star analyst covering Magnite stock, Magnite is trying to follow in the Trade Desk's footsteps in order to continue growing. Martin says she expects Magnite to successfully execute the same game plan the Trade Desk implemented in 2020, which was based on setting the company apart from other competitors as a provider of full-service digital ad products backed by independents. She goes on to say that Magnite is a one-stop shop, which gives it a unique competitive advantage. And she also believes that the continued shift from linear TV to connected TV will continue to be a tailwind for Magnite stock and will push the stock higher. Now, something else Martin points out is that spending on advertising is closely correlated with GDP growth, which is a fancy way of saying that as the economy does better, the amount of money advertisers are willing to spend on advertisements also goes up, which makes sense. Now, experts forecast a positive 500 to 1,000 basis point positive swing in GDP in 2021, with digital ads growing at a rate that is 2 to 3 times faster than regular ad revenues. Martin also noted that within digital advertising, connected TV ads are growing fastest. And since Magnite's highest payouts come from connected TV, this implies upside in Magnite stock in 2021 when compared to the consensus estimates. Now, even though Martin is bullish on Magnite stock, she only gives it a $30 price target, which is actually lower than its current stock price of $34. But I honestly wouldn't worry too much about this. Analysts usually can't keep up with high growth stocks that keep running higher, and they often raise their price targets to keep up with big price jumps after they happen. Now, in terms of financials, Magnite stock looks really promising. Magnite expects its fourth quarter revenue to be in the range of $72 million to $75 million. That represents a growth of between 18% and 23% quarter over quarter. The company also expects adjusted EBITDA margin to reach approximately 30%, which is a sizable jump from the 23% figure it achieved in Q3 of 2020. Also, analysts are expecting Magnite's revenue to rise by 37% this year, and they also expect the company to generate non-GAAP earnings per share of 1 cent this year. And this positive earnings per share means that Magnite could be on track to record more sustainable earnings going forward. But with all the positive news on Magnite stock, there is actually another programmatic ad company that I actually like better. This company is called Pubmatic, and they recently went public on December 9th of last year. Pubmatic has a market cap of $1.6 billion, and despite trading flat for the last 2 months, it looks like Pubmatic stock might be ready to take off. Pubmatic stock was up over 20% yesterday, and it is showing no signs of slowing down. Now, unlike Magnite, Pubmatic is choosing not to follow in the Trade Desk's footsteps and is instead paving its own path. CEO Rajiv Goel says that Pubmatic has moved beyond solely being a supply-side platform for for publishers and is working more closely with advertisers and agencies as well. That means instead of just working with the tech players on the other side of the ecosystem, the demand side platforms that cater to advertisers like the Trade Desk and Google's DV360, it also has direct agreements with large agencies and advertisers. And Goel believes that there are benefits to using this approach. He says that because we're close to publishers, we can help advertisers better screen for low quality ad placements. For instance, those that wouldn't be easy for consumers to see, or ad traffic that's generated mostly by bots. And he goes on to say that this would have the effect of increasing an advertiser's return on investment, and therefore would cause them to spend more money on Pubmatic's platform, which of course would allow Pubmatic to generate more revenue. Also, Goel believes that Pubmatic's approach in regards to infrastructure and transparency will set it apart from its competitors. He says that what we've been building over the last 14 years is a global cloud platform that processes 134 billion ad impressions per day and a trillion advertiser bids per day. And he goes on to say that the main benefits of using Pubmatic's own cloud infrastructure instead of relying on a provider like Amazon Web Services is that customers will be better served. Goel says that we think there are some unique characteristics to digital advertising that makes it such that owning and operating your own infrastructure can create much better outcomes for customers. Now, the key difference between Magnite and Pubmatic lies in the platforms they serve. A research note from Craig Hallam Capital Research said that going forward, we believe Magnite can continue to take share in premium inventory, while Pubmatic can see success at the lower end, providing opportunities for both entities to grow. And really, when they use the word premium content here, they are referring to advertiser revenue from connected TVs, which in Q3 of last year, Magnite saw a rise of 51% in revenue from connected TVs. Now, Pubmatic, on the other hand, gets most of its revenue from ads placed on websites and on apps, and it also places ads on short-form digital videos. But even though Pubmatic is not generating a majority of its revenue from connected TVs, like the Trade Desk is, doesn't mean that it can't do so in the future. Goel says that Pubmatic remains heavily focused on top publishers in the connected TV space and notes that this is where advertisers spend the lion's share of their ad budgets. And he also believes that Pubmatic can successfully expand into this market segment. Pubmatic started rolling out a small connected TV business only a few months ago, and already they have a few dozen publishers working with them, including AMC. So that is a really good sign. But in terms of valuations, which one of these three is the best investment opportunity right now? Well, according to TipRanks, Pubmatic has the most upside with a 3.45% upside from analysts' average price targets. The Trade Desk is the next best with a 0.87% downside, and Magnite is last with a 40% downside. So clearly, analysts are most bullish on Pubmatic and the Trade Desk stock over Magnite stock right now. But if we calculate the valuations of these three companies based on their revenue to market cap ratios, we get a much different picture. The Trade Desk generated $516 million in revenue for the first 9 months of 2020, compared to $140 million for Magnite and $93 million for Pubmatic. Now, if we compare the revenues for all three of these companies based on their current market caps, we can see that the Trade Desk trades at a much higher valuation. If we take the Trade Desk's revenue of $516 million and divide it by its current market cap of $36 billion, we get a revenue to market cap ratio of roughly 14. Now, using this ratio and applying it to Pubmatic and Magnite stock shows us just how undervalued these two stocks are. Using Magnite's revenue of $140 million and the Trade Desk valuation tells us that Magnite stock should actually have a market cap of roughly $10 billion. And doing the same with Pubmatic stock gives us a comparable market cap of roughly $6.5 million. However, Magnite only has a market cap of $3.9 billion right now, and Pubmatic is even smaller, boasting a current market cap of only $1.6 billion. That means that Magnite has a potential upside of roughly 250%, while Pubmatic has a potential upside of 400%. And based on this, it is no surprise that Pubmatic was up over 20% yesterday and Magnite was up over 15%. So as you can see, there should be plenty of upside to both Magnite and Pubmatic stock, and I believe that these two stocks represent a good opportunity for investors to get in early on this digital advertising trend, especially as it continues to accelerate. So if you enjoyed the video, make sure to hit the like button. Also check out my channel where I have a bunch of other great videos that you might find interesting. And with that, thanks so much for watching, and I'll see you in the next one.